All right, guys. So today we are going to go over how to day trade with no money. All right. So we're going to figure out how we can make $100 to $500 a day with having no money. So this is an introduction to day trading. Because basically, if you're probably trying to figure that out, it means you're probably new to day trading. So day trading involves buying and selling securities within a single trading day to profit from short-term price movements. So basically, that means you're trading within the same day, same time frame of the day. Typically, 5 minutes is kind of considered scalping, but 5 minutes up to before the close of the day. And starting day trading with minimal capital is a challenge to overcome through education, careful planning, and strategic execution. Emphasize the importance of understanding risk, choosing the right brokerage, and using smart trading strategies with minimal initial investment. So why these things are important is because if you don't choose the right brokerage, they may not have a leverage amount that you can trade with, meaning that you need more money or capital to trade the security or the stock that you want to trade. So basically, by choosing the correct brokerage starting out, you might have more leverage than you would with another brokerage, allowing you to use less money or capital needed to make the trade or trade with. That's part of making sure you have the correct education and the right planning and execution. Because if you don't have the right planning going into this, you will not be able to trade with little to no money. You'll be needing a lot more capital money to start out than you intend to use or have to use. The fundamentals of day trading. Day trading requires a strong grasp of market dynamics to capitalize on short-term price fluctuations effectively. Technical analysis skills are essential for identifying entry and exit points in volatile trading environments. So basically, you need to have good skills if you're going to be day trading with little to no money, because if you don't have a lot of money starting out, that means that once you take a loss, one or two, depending on your risk management, you can basically blow the account and have to put more money in there. And if you're starting with little money, that means typically either you don't have the money to start with, a lot of money to start with, or you just want to test it out. So being able to have the right analysis skills will help you avoid losing money in the long term. So that way you can make the best of the situations and profit off of those short-term fluctuations to continue to grow your account when you're starting out. Maintaining a disciplined approach, continuous learning, and monitoring, excuse me, can't talk today, market trends are crucial for long-term success in day trading. So with this, you basically do want to make sure you're always learning, taking any losses that you do have, because it's almost impossible to not lose in trading, especially a day trading situation. So when you are losing, you just want to make sure that you're taking the time to learn why you lost that day and take that as a lesson, not a L as in a loss, but a lesson that you can take forward and move forward in your next trade, in your trading journey, and be very disciplined and methodological about what you're doing, meaning that you have a risk, a risk set as far as like risk management. Like I won't risk more than $200 per trade because I only have, XYZ in my account, maybe be $400. That's a higher risk amount. But if you don't have that much money in your account, your leverage might not give you a lot of room to wiggle with. So you just want to, be aware of those things when you're making a long-term plan. All things we cover within the program. Choosing the right brokerage. Selecting the right brokerage is vital for day trading success, considering factors like commission fees and trading platform usability. Again, brokerages are very important when you're trading. You can't just go directly to the market and exchange money. You need a broker to be the intermediary for you. Brokerage plays a key role in executing trades efficiently and providing traders with essential research tools and customer support. So again, the brokerage is going to be that middleman basically for you to make sure that you are getting the best price and that price is consistent, and that if anything goes array or wrong, they have support to help you out so that you're not trying to figure it out on your own. Access to quality research tools from a brokerage can enhance traders' decision making, overall trading performance. Now, I personally, I would personally say that I've traded with Thinkorswim, and I've traded with TraderMate, and I've traded with Hugo's Way when I was trading Forex, and Trade Locker. So I have went to all of them for support before. I have used some of their tools before in the past to kind of help me understand leverage and stuff of that nature and what's the better broker for me. But they do have tools set up for you to learn and become a better trader. I highly suggest that you just find your mentor, someone who could kind of cut out all the fluff, because a lot of stuff in trading you don't really necessarily need to know to be profitable. But practical strategies for day trading: setting realistic goals to outline desired profits and losses, aligning them with your risk tolerance and trading style. So if you're day trading, and for me, I like to spend an hour and a half most, a day trading so that I can still have my morning and my evening to myself to spend time with my family, go out and do what I want to do. So you need to set realistic goals for how much money you want to make and take the time to say that, hey, I need to make X, Y, Z. I want to make $100 a day. Well, that doesn't really require a big movement. I want to make $500 a day. That doesn't require a big movement either. But if you don't have a lot of money in your account, you need to know when that time of day is going to come for the movement to be most practical for you to basically get the best out of the trade. You want to use stop losses to limit potential losses and protect your capital from substantial downturns in the market. So basically, that just means that once you get into a trade, you want to make sure there's a certain amount of money that you can lose before you basically blow the account and lose all the money in the account. You don't want to just be saying, I have $200 in my account. I'm going to trade until I don't have $200 no more. No, you want to set a stop loss, maybe $20, and maybe 10, whatever, you come up with your risk parameters are per loss that you are okay with losing before you say that too much is enough. I suggest making it a low amount so that way you can continue to trade. And also something that's going to be above the required leverage amount. So that way, if you lose the money, you're not required to put more money in to keep trading based on the brokerage. You want to diversify your portfolio and spread risk across different asset sectors and markets, reducing vulnerability to volatility. So I trade US 30 NYM. That's basically the same um, asset class. It's the same stocks that make up the Dow Jones. So for me, I don't really spread it out too much. I'm very versed in my trading strategy, so I could trade other things if I needed to. I do have other long-term and short-term investments. I have crypto. I also have dividends that I'm working on establishing in the long term. So you just want to make sure that if it's the last little bit of money you have, that you are doing the best. And I wouldn't even suggest trading the last little bit of money you have, but I have some tools that I'm going to give you so that way you can make the best of it if you are going to do that. But you just want to make sure you're diversifying your portfolio and you're not putting all your eggs in one basket. I'm sure you've heard that before, and that stands to be true. Risk management and day trading, proper position sizing and setting risk reward ratios are crucial to management risk effectively and protect capital in day trading. So basically, this is called R in trading community. So let's say you risk one, whatever your risk to one is, you want to profit seven, is what I like to do, which is kind of not a lot, but my minimum risk would be 1 to 4. And if you're starting out with a smaller account, you might want to do 1 to 2 or 1 to 3. And you're trying to figure out, well, what does that mean? That doesn't mean anything to me. So basically, if I risk $100, my R to R is 1 to 2. That means that I would need to profit $200. So I have a 1 to 2 risk reward ratio. The risk is the first part, reward is the second part. So basically, if it's 1 to 3, then that means I risked $100, but my profit is $300. So you just want to have an R to R that is reasonable for your account size. Trying to do something that's 1 to 7, which is stuff that I do without knowing the actual strategies and tools that I have to teach you, would be very difficult, I would say. And that's more of a gambling situation. So turning $100 to $700 is a bit of a uh, gamble if you don't have the right systems in place because you don't know what time of day to take those kind of trades, how long it should take for that trade to play out, and if the trade is going to be actually going against you or if the trade is even really going the way you think it's going to go. Emotional trading decisions can lead to impulsive actions that may result in significant losses, emphasizing the need for discipline. This part is basically, when I wrote this, I was basically going back to psychology things. So if you don't have the correct psychology in trading, your emotions will get the best of you and you will lose a lot of money because you're going to be gambling basically at the end of the day and let your emotions get the best of you. Capital preservation is paramount in day trading to ensure long-term sustainability and success, requiring adherence to risk management principles. You want to know how much money you're willing to lose in a day and okay with losing before it is too much. You got to know your pain tolerance of if I got $100 in my account and I risk the whole $100 today in one trade, and I lose that, am I gonna be sick? Am I gonna be mad? Am I gonna be upset? I always say don't risk the rent money because I know people who they trade the rent money, they trade their last. I don't think that's wise. If you at that point where you feel like, hey, I just got this and I'm gonna do it. It may not literally be your rent money, but I think you guys get the point of what I'm getting at. Like you're risking something that's pertinent, money that you need, monies that you need. You're just risking it so that you can get, flip it just have a certain amount that you know that's too much before you pull the money is what I'm getting at. Have a preservation amount where I can't lose more than XYZ in a day, or so that way it takes me 10 losing days in a row to lose all my money. Or maybe like for myself, I can't lose more than $400 in a day. So basically it would take me, I think it's 20 days of losing every day in a row before I am in a dangerous situation in my account before I realize, okay, I got to do something about my trading strategy. Typically I never get to that point. I might have a two-day losing streak, lose $800, and I'm like, I'm going back to the drawing board. I'm gonna go practice. I'm going to back test. I'm going to look at my strategy and see what I've been doing wrong in my strategy to be losing. Often it's just not being patient for me. Uh, but that's one thing. And continuous learning and day trading. Continuous learning and day trading is a valuable tool for skill enhancement and adapting to market changes. Utilize resources like trading books, online courses, webinars, communities to expand knowledge. I commend you for being here because this is basically a short webinar is what I would call this. I do have an online course. Trading books are good, but I like trading books. I'm not gonna say I don't like trading books. I love reading. Trading in the Zone is good by Mark Douglas. Biggest Losers Win, and um, this is another one that I've read that I kind of like. But those first two are the main ones that I read consistently over and over again. Um, I commend you for being here because these are the kind of resources you want to be using and staying in, within your trading journey to make sure you're getting the best out of it. The other one is The Mental Game of Trading by Jared Tendler. Um, you want to review your trades, learn from errors, and refine strategies consistently to improve trading performance. Um, Basically, that was what I was just saying a couple of minutes ago. On the last slide about how if you lose, 8 days in a row, 2 days in a row, whatever your number is for yourself, you might need to sit down and say, what was I doing wrong? What can I do to refine my strategy to make sure I'm not losing as much money or I'm not losing, period. You can't be 100% accurate all the time. This game is a game of probabilities. If you do it right, you don't have to be right more than 30% of the time if you know how to actually manage your risk appropriately and manage your rewards and your you don't even need a high win rate. So if you do have a high win rate, that's even better. But you don't need the best win rate to be profitable in trading if you understand your risk management and your risk reward ratio. So the conclusion to all this is basically building a foundation for successful day trading starts with a small initial investment to test the waters and gain experience. Choose a reputable brokerage that aligns with your trading goals and offers competitive fees, and prioritize risk management using stop loss orders and continuous education or yourself to adapt to the market. So basically, to make that short and sweet and simple, you want to just make sure you're picking a brokerage that supports your goals with the amount of money you have. Maybe you don't have any money at all. I trade futures right now, and I occasionally will trade options if I see something that long term I feel like is a good play. So what I would highly recommend though is if you don't have a lot of money is go find a prop firm. Basically, a prop firm is a company with their own proprietary software that has a brokerage they use. You pay them a certain amount of money to get an account. That account may be $50,000, $25,000, $100,000. This account is not real money. It's a demo account with paper money. And basically, if you make $10,000 this month, most of them pay 80% of that or more to you. So if you make $10,000, you would get paid $8,000. They would keep 20% of that. But the money that they're paying you is from basically other signups and other traders that they're be booking, basically taking their trades to the live market and trading simultaneously with them and making profit from that. Prop firms are good because basically it's going to allow you to get more money, more bang for your buck. Is allowing you to get more leverage. Because if you only have $100, honestly, it's going to be only a matter of time before you blow your account because $100 isn't a lot of money to trade with, especially considering the amount of leverage you need to even trade to make substantial profits in a day. So if your goal is only $100 to $500 a day and you only have $100 to start with, you can go to a prop firm, get $50,000 to trade with, have probably a max loss size of $2,500. So kind of look at that. I have $100 to lose, or I can spend $100 and have $2,500 that I could lose. So I'm just trying to give you more ideas and tools you could use to basically start out with saying, cool, I got more room and leverage to play with, opposed to I only have $100 and it's my last $100. Granted, If you're trading on a prop firm, it's a demo account. So I want you to still look at it like it's real money because you can make real money, get paid out real money. And I want you to understand that at the end of the day, you are going to be able to make more bang out of your buck using that than if you said I only have $100 and I'm trying to trade $100 and have to deal with leverage and all that. But basically, if you want more information, you can subscribe to this channel. You can go and find me on Instagram at BCM Brinks. And we also have different educational material and tools to help you through your process to gain skills and strategies to be the best trader you can be. And I'd love to see you at the finish line, see you on the other end, because trading could change your life. You can make your yearly salary in a day easily. So just be very mindful of that. Don't start out trying to make $1 million. I would suggest starting out, try to make $100 to $500 a day, whatever you consider is good for you. $500 a day can easily be an extra $150,000 a year for you. So just be mindful of those things, that it doesn't take a lot, it just takes compounding of those skills.